In today's video, I'm going to be sharing with you guys a simple strategy that has made me hundreds of thousands of dollars in the stock market. I'm going to break down what this strategy is, how to use it, and how to identify entries. And I'm going to show you real examples on real trades that I've taken using this strategy. But real quick, before hopping into the video, if you guys do find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And also make sure you guys stick around to the end because I do have a surprise for you. But without further ado, let's hop into the video. All right, so the strategy that I'm going to be sharing with you guys today is going to be known as the Fibonacci retracement trading strategy. So if you're on thinkorswim, if you come down here to active tool and you find this percentage sign right here, it's going to say Fibonacci retracements. Regardless of what broker you're on, just find where it says Fibonacci retracements. Now, what we're going to do real quick is we're just going to draw this onto the chart. Now, by default, your Fibonacci retracements is probably going to look something like this with a bunch of lines. However, when I'm trading using Fibonacci retracements, the main two that I want to pay attention to are the 61.8 and the 50% retracement. Reason being, these are the most common areas that price is going to retrace to before continuing in its original trend. So because of that, I take off everything that is not the 61.8 or the 50% retracement. So now that you have those two drawn, how do we actually utilize this tool? Now, the very first thing that you want to look for is an overall trend. Is the trend uptrending where it's setting higher highs and higher lows? Or is it downtrending where it's setting lower highs and lower lows? This is going to be very important. Now, multiple different time frames can offer multiple different trends. For example, we could be trending up on the daily time frame, a trade that I took earlier this week on NQ. I actually took shorts using a Fibonacci retracement, but on the daily time frame, NQ is uptrending. However, on the 1 hour time frame, it was downtrending. So because it was downtrending on the 1 hour, I could use Fibonacci retracements to identify potential rejects. But because it's uptrending on the daily time frame, I would want to use Fibonacci retracements to find bounce levels. And you can see just the other day, we bounced right off that 61.8. So once you identify the overall trend, we'll just use an uptrend example in this scenario. You want to identify the lowest point before price makes a strong, aggressive move to the upside. Now, once price makes that strong, aggressive move up, you want to wait for price to start pulling back. Once price starts pulling back, and you have reason to believe that this is our potential high before the retracement back down, you can take your Fibonacci retracement tool and you can draw it from pivot low to pivot high. Now, from there, we want to look for price to come down and retrace to the 50 and 61.8% retracement. And the reason I really like this strategy is because it lets us know precisely where that potential higher low is going to be. Because when it comes to support and resistance, I mean, it really depends on where you're seeing the support and resistance. And then also supply and demand, it's more so like a big area that you have to watch. Fibonacci retracements tells you the exact level to watch. Again, if we go back to the daily time frame on NQ and we take this clear cut pivot low to pivot high here, the Fibonacci retracements let us know to watch exactly 18,150 and exactly 18,024 for potential bounces. Again, very, very precise levels. So when price is in an uptrend, again, you're going to find the lowest point of price action and the highest point of price action. Draw your Fibonacci retracements from pivot low to pivot high and wait for price to retrace back down to the 50 and 61.8. Now, as far as rejects, what we want to look for is a clear-cut pivot high and a clear-cut pivot low. Now, in order to identify where that clear-cut pivot low is, you want to wait for price to start bouncing back to the upside. So this is going to be the highest point before a strong, aggressive move down. As price bottoms out and starts to pull back to the upside, that's when you can take your Fibonacci retracement tool and draw it from pivot high to pivot low. Now, from there, we want to look for rejects at the 50 or 61.8% retracement. And as price trades back up into that area, we want to look for price to reject off the 50 or 61.8, and then from there, look for a short entry to the downside. And I can't stress this enough. You want to know the overall trend when using the Fibonacci retracements. So now looking at current price action, we can see on the 5-minute time frame, price came up, it double topped at this pre-market high, gave a little liquidity sweep, and then it broke this low right here, setting a new low, which is then letting us know that price is potentially shifting overall trend. So now if we take this clear-cut pivot high to this clear-cut pivot low, what did we just reject off of? the 61.8, and look at where we're going from there. So now let's look at some trades that I've taken in the past using Fibonacci retracements. And there was actually a really nice trade that I took on QQQ yesterday for puts. Now remember, I said on the daily time frame that NQ had that 61.8% retracement down here, and it ended up bouncing off of it. Now this is where market context is going to come into play, because I said yesterday that I do not care about ES shorts whatsoever, because price was trading in ES demand. So that's why I did not care about shorts. However, with QQQ, I was a little more open-minded to taking shorts, just because if NQ was going to bounce anywhere, it was going to be back down at that 61.8 down here. So because of that, I was a little more open-minded to shorts. So if we go back to the 5-minute time frame on QQQ yesterday, you can see that in the morning, price had this nice, strong, aggressive sell-off to the downside, and then it started to pop back up. So as I was looking at QQQ, if there was any area to try to reject this thing for shorts, it was taking this clear-cut pivot high to this clear-cut pivot low. Now, as price started trading to the upside, you can see that price had decreasing volume. Now, as QQQ pushed up into that 61.8 and even the 50, I like to see a strong reaction off the level. The reason I did not take this 50% rejection, because this wasn't a strong enough reaction off of the 50% retracement. It was very light volume going into the level. That's not what I like to see. When price hits these retracements, I like to see elevated volume and confirming price action. So we did not get the elevated volume here. However, as price traded up into that 61.8, we got a nice little gravestone doji, a very long upper wick, but then this 5-minute volume right here was higher than the 2 previous green volumes. That to me confirmed a short entry, and I ended up getting short at 1.09, and these contracts moved all the way to a high of 1.5 in less than 15 minutes. Now, in those scenarios, we don't know how low QQQ could have went, but what we can do is trim out of our position and move our stop loss up. So eventually I was stopped out in profits on the remainder of my position, but for all we know, this could have rolled over and went all the way down to our bounce level on NQ, which would have resulted in a huge gain. Same thing with today when we got that liquidity sweep, a strong flush to the downside. Well, if we aren't trading at any bounce level on QQQ, which now I personally don't have one until 437.12, then we can take that clear-cut pivot high to pivot low and then look to see how price reacts as it trades up into the 61.8 or the 50% retracement. So let's break it down to a smaller time frame. Now, looking at this is a picture perfect A+ example that I am showing you. So I want you guys to screenshot this, because this is the exact thing that I look for when I go to trade with Fibonacci retracements. So looking at this example, again, pivot high, pivot low, price trades up to the 50% retracement. Does anything about this say to get short? Not at all. Price just broke right through it. We don't want to go short just because price is trading at the level. We need that confirming price action. We need that confirming volume. Look at this 2-minute candle right here at the 61.8% retracement, 439.36. Price trades up into it. Look at how high this 2-minute volume is compared to all the previous volume bars right here. And plus, on top of that, again, we got a gravestone doji. So at the close of this candle right here, you could have went short with your stop loss right above 439.50. So if you got in at 439.30, you're risking about like 25-30 cents to the upside. And this thing now has dropped all the way down to a low of 438.33. So again, that is literally like the best example I can show you right now. That is exactly what I look for every single time we trade to these key areas. So I want to show you guys 2 more examples. This is another reject, and then I'm going to show you a bounce that I took using Fibonacci retracements. But looking at SPY right here on the 5-minute time frame, the overall trend was down whenever I took this screenshot, but we had this nice solid pre-market high up here and price flushed to the downside before bouncing back up. So as a result, we're going to take this clear-cut pivot high to this clear-cut pivot low. And as we can see, when price traded up into that 50 and 61.8, look at this candle and look at the volume. Now with this, I sniped it on a lower time frame, the 2-minute, with a stop loss right above this high right here. But even if you waited for the 5-minute candle close, I mean, this was a clear short. and you still could have caught that move to the downside. So again, that's a really good example. And then here's the final example that I'm going to show you guys. So looking at Meta, again, we had this clear-cut pivot low. And honestly, I've gotten some questions about this. Like in this scenario, would you use the opening low or the pre-market low? I mean, they were so close that I just went ahead and used the pre-market low. But we have that low point, regardless if you took it from here to here or here to here, it still was around the same general area. But taking that pivot low to pivot high, again, once price topped out and started pulling back, that's when you can draw it. We're looking for price to come to the 50 or 61.8, and we're looking for a bullish reaction. When price came down to the 50, did we see any bullish reaction? No, not at all. Therefore, there's no long entry there. However, when price came down to the 61.8, we got a long lower wick, and we started to get that elevated volume off the level. So as a result, I ended up going long on this trade. I personally only caught it up in the VWAP, but my stop loss was right on the opposite side of this. Now, had you held it for the remainder of the day, I mean, this thing went back, pretty much right back to high of day. So again, to sum up this entire video, understand the overall trend. Is price in an uptrend or is it in a downtrend? From there, you want to identify your clear-cut pivot high and pivot low. If price is in an uptrend, take it from pivot low to pivot high. If price is in a downtrend, take it from pivot high to pivot low. Look for price to trade to the 50 or 61.8% retracement. Look for confirming price action and look for confirming volume. From there, you can look for an entry with a stop loss right on the opposite side of the fib. Now, as promised, I am hosting a free webinar on April 1st, diving deeper into Fibonacci retracements and sharing more about my overall trading strategy. And again, it's completely free. So make sure you take 2 seconds and register. That link is going to be down in the description. And if you can't make it, it will also be recorded and sent out to you right after the session. Other than that, make sure you guys are subscribed to the channel. Everybody have an amazing rest of your day, and I'll see you guys in the next video.